Today's agenda is last time we were together, there was big tech and airplanes. Today's agenda is cars and food in the context of pricing. I think we should talk about cars first. There were a bunch of headlines about Apple backing out of their car business, which was called Project Titan. So let me just read the headlines and then we can jump into it. This is, all right, so there were a few. Wall Street Journal reported Apple ends quest to build its own electric vehicle. Inc. had Apple scrapping its electric car and moving employees to AI. So the whole idea here, this Project Titan, which mostly seemed to come out through like rumors and leaks, by the way, over the past like 5 years, but it seemed like they were losing or spending $1 billion a year on creating a self-driving car. At different points, they said, they, as in these like very unofficial sources, said that it looked like the car would come out as early as 2025, but in some cases more like 2030. They shut this all down, Project Titan, and moved resources to AI. The other thing in the mix of this that I hadn't really thought about is like you've got Microsoft and Alphabet that have their first mover advantage in the whole world of AI, and Apple, to some, was behind in that part of the business. What do you think about a starting point for this one?
It's very relatable. It makes a lot of sense for Apple to try to experiment in ways like this. They've got this massive brand, they've got cash that needs to be spent. So it doesn't necessarily surprise me that they would make these large investments, nor does it necessarily surprise me that they would pull back on certain ones, right? It's you try certain things, you fail over time, and then you're making big bets on what's going to come about. And then we could go into a lot of depth on the EV market in and of itself, because that entire market has been under a bit of pressure from a pricing perspective. So what likely happened is, to your point, they spent a bunch of money on it. They realize it's really expensive, and they realize from a longer term perspective, the world is starting to get commoditized because you're seeing a lot of these manufacturers, Tesla being the prime example, where prices are dropping quickly. So it's becoming less attractive over time in a space that is really, really expensive. But again, it seems to fit that Apple mold where they're going to try things that are, perhaps adjacent at best to their market.
Yeah, or maybe said a different way, it's a $3 trillion company. To move the needle, you've got to go after big bets and big industries, and automobile was certainly one of those. And then the dynamics changed. So like healthcare is another one that's big. They kind of have the Apple Watch, and then there's AI, which is the emerging one. And so maybe the calculus, it's like the same thinking of like, hey, we got to go after the big fish, but who the big fish is changes. And even though it was some sunk cost, there's, maybe it's messaging. I'm sure some of the engineers might have been around the automation or self-driving, that sort of thing probably is an overlap with AI, but I imagine some of like the vehicle designers won't be transitioned to AI.
Right.
It's interesting to me, when I was thinking through this, it's like, do we consider Apple to be a hardware company, or do we consider them to be a platform company, right, or a software company? And I had a hard time kind of answering that because obviously they've produced a lot of great products, right, and innovative products, and all the way up to the goggles that just came out, right? So I don't want to diminish their impact on products. Of course, that's there, but I think their bread and butter is really the platform. As far as their ability to make money, is they've got the product that sits on top of their platform. And when I heard about Titan a couple of years ago, my son was excited about it. So he's the one that kind of told me about the car Apple is producing. And I don't, it's manufacturing a car to me is so different than a phone or a goggle or a wearable for a consumer. It's a different beast. And I really didn't understand why they were going into it. I felt like that was a little bit of a departure. And like you said, Pete, like if they're focused on self-driving software, or they're focused on some type of platform related for the EV market that they could sell to multiple manufacturers of vehicles, I get that. That I totally get. But
that's called Apple Play, right? They're already there.
right. An extension of Apple Play, right? But this whole notion of manufacturing a vehicle, it's not the same as goggles or phones or tablets or whatever it is. And so I'm not surprised. I was not surprised at all by this. And I'm also not surprised on their focus on AI because, Tracy, I think you're right. I think the Apple CEO is in a lot of trouble. And there were rumors of even him getting fired because the market perception is that he is in fourth or fifth place in the AI race. So changing and diverting resources to AI is not surprising at all. Makes sense.
The one thing I would add to that is always Apple has always been a company. So, I for sure understand the point about hardware versus a platform, but they're without a doubt a company that wants to control the entire ecosystem, meaning the hardware and the software. And that's the investments they have made. To your point, that upfront investment in a car is way more complex than anything they've ever done. And you can argue that's out of their kind of their core competencies.
Yeah, like they're going to come out with a ring, right? So instead of a watch, you can wear a ring for your biomeds and things like that. That makes perfect sense to me. That's an extension, and to your point, Adnan, it's still an extension of what they do now. It fits with the strategy. The car is just so difficult, and not to mention, I think Tracy, this ties to the other article that you sent out also on what was it, Ford, that's cutting prices. The EV market has gotten to be a bloodbath. There's a price war going on. Obviously Tesla's been cutting costs, cutting prices. They're trying to maintain market share in order to get some type of scale from their platform play and software play, and they're losing share like crazy. And Ford needs to get in there and start slashing their prices to be able to control that market share from their end. So the EV market is just, we don't know what's happening, what's not happening. We don't know what the government's doing as far as giving those credits. So we just don't know what that end pricing is going to be. But as a consumer, you guys know I've been looking for a car for a little while now, and I just can't get myself to pay $70,000, $60,000 for a car, like a regular car. I'm not talking about a Mercedes or something like that. It's just a regular car. It's pricing out to be like $50,000, $60,000. A $60,000 car is a $1,200 payment per month on 5-year payment plan. $1,200 is like in the olden days, that used to be a house payment.
Right.
I mean, insane. So I just don't. It's tough to be in this space right now for sure.
By the way, Elon reposted the announcement from Apple. He put like the salute emoji and then a cigarette. I was like, oh boy. But the other article that you had sent, Pete, this is Yahoo Finance. So to your point, Jeet, Ford slashing their prices. Tesla's also been, so I guess this is all mixed in with rates being higher than expected. The demand for EVs is lower than expected. So they said, this is Ford said they were trying to, quote, balance sales growth with customer value. It seems like, first of all, that they dropped the price to be under 40K for this Mustang. And then the other thing that appears to be in the mix is the model and the Tesla model are kind of like 1 and 2 in the electric vehicle. So the way that they set the tone for pricing and dropping prices and all that kind of has bigger implications, which maybe we start there.
Yeah, I feel like there's so many things going on. The one is the government subsidies are at least temporarily reduced. So then the manufacturers are making up for that in terms of more advantageous pricing and financing. You have more players getting into the market. And that article didn't even talk about BYD, which has now overtaken Tesla as the global manufacturer that's actually producing the most and probably will continue to do so. More at the low end of the market than the high end. But I think they're thinking that they need to capture more market share for the average person that's considering other vehicles. And I think it's just the normal place of, you think of the product innovation cycle, the early adopters have kind of gone there. And then there's this trough of despair while infrastructure or attitudes catch up and also people don't buy cars every year, it could be 5 or 10 years until you do. So I feel like it's just, maybe it's not actually that abnormal, but certainly there's less, it's not growing at the same rate that was anticipated, even though it's still a low base effect of low percentage of the average person who has a car.
Again, a tough space to be in. I think Tesla has gotten the scale to be effective in that space. And then they've got the autonomy and flexibility from a pricing perspective to go out and change prices so drastically. So they've built this kind of new age of infrastructure that they're taking advantage of. And some of the incumbents are in many ways struggling with it. The entire space has the ability to make it less attractive for new entrants to come in. So, bringing all those things into play, all of these things make a ton of sense. The fact that Ford is going into the space this aggressively and is able to price a Mustang at that price tells me that they're going to look at that they're betting on scale over the long term so they can start to compete in a profitable way.
We had talked about this a couple, maybe months ago, maybe even longer, but like the whole strategy for Tesla being like, let's just get the fleet as big as possible. So we have as many cars on the road as we can, so we can start to like press into the software, and the data is really like our moneymaker, and how all that works together. And I wonder if, does Ford have a choice but to also play the same game? I just don't know. I don't have all the numbers in front of me, but it seems interesting to me that Tesla kind of set that precedent where it was like all the prices were dropping. They knew they were taking maybe this was at some point last year. They knew they were taking a massive cut in profits by dropping all the prices so they could get as many of these cars on the road as they could do.
Yeah, they're without a doubt, in my opinion, they're a software company. Their secondary is their hardware or a car company. And the more they can get their vehicles out there, the better it is for data collection, along with every other way they're monetizing themselves, including charging stations, things like that. So I think Ford has the same thought, right? I think everybody does, because they will make more money. There's also the thought of, how do you get people back into your ecosystem to try your products? Because people tend to be loyal if they try your products, and it's hard for them sometimes to switch. So if you get them in, you have a better chance of providing loyalty discounts and things like that to keep people in your ecosystem. So you might be able to get more than one car out of a buyer. So you're trying to switch buyers, right, from one brand to the other. So like BMW has loyalty discounts. So if you buy your second one, you get a discount if you already had one. So I think there's multiple factors here, but I think the biggest factor is consumer demand. That's the biggest question right now. I think everybody was expecting consumer demand to be at a certain level, and it's no longer at that level. It could be a function of all the EV producers coming in at the same time. It was, Tesla was the only one, basically. I'm exaggerating slightly, but basically the only choice. And now you've got, between Kia and, even the smaller brands like Rivian and Fisker and things like that, you've got a solid 8, 9 different brands that you can choose from for EVs. So that right there kind of dilutes the branding conversation from a market size perspective. But then you have the price point, which basically takes majority of Americans, at least, out of the equation when you talk about $100,000 car, right? So then what does a manufacturer do who's already committed to infrastructure of manufacturing and producing based on a certain level of demand? Now they have to start slashing prices in order to get these products out there, because if the more these cars sit in their parking lot, the worse it gets for them. I mean, every day is like big losses, right? Because if I'm going to buy a car, I'm not going to buy a 2023 unless I'm on a used car. I'm going to buy a 2024. So they've got tremendous inventory of 23 sitting there. So Ford's like, I'm going to take a bath on all these cars, so I have to slash my prices. So I think the driver, regardless of the business model, which I think, Tracy, you're 100% right, there's definitely a factor about business model and a software and collection of data. But I think this is also a larger part is the simple fact of demand that's cooled off on EVs and these new purchases that we've seen.
The other thing that comes into play when it comes to consumer demand is perhaps not market saturation, but effectively folks that are initially buying an EV are realizing that you often may need a fuel injection car in addition to an EV, because if that's your only car, taking, say, a road trip with an EV, not to say you can't do it, but it adds a layer of complexity and may not be as attractive because you have to figure out charging and things along the way. So that complexity is there, meaning that the growth rate may not be quite as fast as it historically has been. Obviously, there's still room in the market to grow, but perhaps not aligned with what some of those original forecasts have been.
I think that definitely plays a factor, because you're seeing stories now of people plugging in and their app not working, they're not being able to, doesn't fit, whatever it is, there's some technical issues that are happening with people trying to charge their car. And there's a fear that comes like, oh my God, I'll be stuck somewhere, right? Because if I can't charge when I needed to charge, I'll be stuck. So that fear definitely plays a part in it. And then not to mention all the recalls that's been happening with the batteries and then the cars getting blown up and things like that. You hear one or two cases, which by the way happens with fuel injection as well. You hear one or two cases, but if you're already doing a behavior change from fuel to electric, and then you see these stories, it just makes you much more cognizant and go, hey, maybe this is not the right time. Let this thing kind of figure itself out a little bit, and I'll get back in the EV game maybe in 2 years or 3 years. Maybe I'll do a hybrid instead for now, or I'll just buy a regular car and then go back in.
All right, let's talk about Nestlé. So Nestlé, this is the headline, Nestlé's profit soars amid pricing strategy, yet faces volume challenges. So Nestlé, and actually the other article is Danone, but these two companies were sharing about their year results from 2023 and pricing, basically pricing's role in those results. The other thing that's just like standing out to me is just the overall noise about shrinkflation broadly. So you've got like the Cookie Monster thing came out this week, the Sesame Street's talking about shrinkflation, then President of the United States had a Super Bowl commercial about shrinkflation, like in the movie theater, and he's like got his snacks talking about these companies have got to stop it. So it's like there's a lot of things that are interestingly coming together with food and retail in particular. So with Nestle, they talked about in this article the things that had them be agile were premiumization, affordability, and nutritious options as the things that were working for them. I don't know if Nestle is a villain in this shrinkflation thing or not, but what did this say to you when you were going through this? I think you sent this one, Pete.
Well, I mean, I guess it makes me feel better about my diet. Nestle chocolate could be nutritious.
Like, a little treat for me.
Little treat for numero uno. I think this is probably like a wag, or like the whipping, the long tail of inflation and kind of the justification for cost increases that were above and beyond what the actual cost inputs like cocoa were experiencing during the last 2 years. And that certainly helped with the 22% grocery prices that we've seen. So Nestle is just a CPG that's contributing to that same industry. So there's really no surprise there, but it's also not surprising that people, you only need to eat so much food. I feel like health trends change. And then at some point, it's not really it's not a necessary product for a lot of what they make. So I think there could just be alternatives, and I'm sure they're becoming more profitable, but to really grow organically and not just from a price perspective, you have to sell more. And I think that's just a challenging thing to do right now, when I think health trends are probably going the other way, and you only need to buy so much of any one type of food.
Nestle, these were the numbers, just because you mentioned the profits. This says they're boasting a 20.9% surge in net profits, reaching a staggering 11.2 billion Swiss francs, which is $12.7 billion for last year.
Yeah. Some big numbers. I mean, I feel like in many ways, it's expected given the environment that we are in. Company valuations are more emphasized by the fact that they're putting more emphasis on profitability. So I wouldn't be surprised for almost every organization to go out there and do the math from a valuation perspective to say, where does it make sense for us to grow from a revenue perspective or a profit perspective? Ideally both, but we all know that that's tough to do. So it's a viable calculation to go in and say, can we perhaps shrink? Are we okay with shrinking volume a little bit in favor of growing profits? And when you state those numbers, it seems like a pretty attractive option. The kind of underpinning of that is this fair and ethical from a consumer perspective, particularly in the space that they are in, with food being a necessity. And I think that's where you start to that's the rationale behind like some of these government bodies coming out and saying, okay, we need to be fair to our consumers. But given the fact that rates are higher, inflation is occurring, it seems in many ways like a natural phenomenon.
In reading this article, I actually read it.
Yeah.
One of the things that I found interesting was there's a quote that says, they want to navigate ever-evolving consumer landscape, navigate ever-evolving consumer landscape. So I found that to be really interesting. And the reason is, like Pete was saying, the demand is changing, right? I mean, it's always evolving. So it's nice that they have this portfolio of products. They have different regions. They can see what's working, what's not working. Now, to Adnan's point, I mean, did they unethically maybe push the envelope a little bit and raise prices more than they should have based on the labor input costs that were going up? Maybe. I mean, I don't know, but they're also failing in other regions. They're also divesting from other things. Some products are not doing well. The volume is going down. Other products, the volumes are coming up. So I think they're doing a good job overall to manage that portfolio of things. I also think this is why it's important to have competition. If they're unethically or pushing the envelope on pricing and raising it too high, where are the competitors? As a consumer, if I thought something was shrinkflation, or the prices were too high or whatever it is, I'm looking for alternatives. I'm not going out and going, I'm still going to buy that same cookie at half the size and double the cost. I'm not saying that. I'm saying what else is out there, and I'm going to get the best thing for me for the value that I'm looking for. So we can pinpoint on these like one 10K versus somebody else's 10K and how much improvement they did on price versus mix versus whatever it is. But at the end of the day, that consumer is making a decision. If I'm deciding to pay the higher prices, why would that company be penalized for that? They have other choices, unless it's a monopoly. Last time I checked, Nestlé is not a monopoly. So I think we have to kind of put it out there and then say this is an efficient market. There's a supply and demand. Demand is still high. They're choosing this product at prices, at sizes. Why is that so bad?
And I think that same logic can be applied to shrinkflation. I mean, what companies are doing is rational given the environment that they are in. Again, you have to be able to treat consumers fairly, but unless it's a monopolistic environment, then companies are making a choice to reduce costs. And the result can be called shrinkflation, but it's market forces that are driving that rather than something that is at least from my view unethical.
That's right.
The other article, similar category, is Danone. When they were closing out or sharing about the 2023 results, it says Danone predicts selective pricing in 2024 as inflation challenges remain. So this CEO was like, we are not in a deflation environment, everybody. But he addressed how inflation was coming down. These guys, first of all, they own Danone, which is just funny. I think that's just like how we Americanized that product, but they own Greek yogurt, different brands of Greek yogurt that were outperforming. But the CEO noted that high input prices would drive pricing measures going into 2024. So there were a few things in this article. First of all, he mentioned oil prices, cost of labor, sugar, especially in emerging markets, but he also said pricing is positive overall for 2024. So it's interesting seeing these CEOs try to both educate and defend things at the same time. Kind of brings me back to this poor Wendy CEO who was new in the role and was like, hey, we're going to try this new thing with pricing. And everybody came out with their pitchforks. And he was like, ah. But what do you think the takeaway is for this one?
I think for me, it's like the one-liner is that word strategically. Inflation was a great top cover for the last 2 years. Now it got harder, and you have to think more carefully about where you have advantages to leverage in pricing.
I think they're doing a good job of understanding, like what Pete just said, strategically where are they performing well, where they're not, and then making those changes to their price based on the advantages that they have in certain regions with certain mix of products. And I think it makes perfect sense. They should. I mean, they're there to make money, right? And to understand their business, understand the root cause of what they're doing. And pricing is extremely strategic in nature, right? We know that and we talk about it all the time. But in order to do the right type of pricing, you need to understand what your objective or goal is, right? If your objective and goal is to alienate your customers, great, just randomly raise prices. Good job. You just did it, But if it's truly in fair practice where you're sharing that value with your customer as you raise your price, I think there's definitely room to be able to do that.
I find it incredibly fascinating, the public response to many of these things and how it varies. Because in the Danone article, they had used the phrase selective pricing. When you say things like dynamic pricing or surge pricing, there can be a lot of uproar, as I think we've all seen with Wendy's. But depending on how you pick it apart and how it's interpreted, it could realistically be the exact same thing. So there's a lot of nuance that may not come out until that strategy is well articulated. But I think this concept of selective pricing makes a ton of sense because we all know, and based on the way that we advise our clients, um, the impact of price changes and inflation varies pretty highly by sector. And he has, in essence, started to break down what it looks like in different sectors and use that as a rationale for selective pricing, which again can be interpreted in a lot of different ways.
These terms, with the Wendy's thing, one of the articles I saw was somebody said, everybody automatically assumed that the dynamic pricing implied that they were going to do surge pricing, which for the most part, people go right to like trying to get an Uber. And a lot of people need Ubers at that particular time. And then everything is twice the price. People are like, oh no. So it's that part of it is also interesting as we start, as these CEOs start to try to use different terms, where people's minds go, however accurate or inaccurate it might be.
It's funny, right? Because in Uber's case, let's take Uber's surge pricing. They've gotten a lot of negative, backlash and things like that. Yet mathematically, it's proven out that it works and they're making money and people are less price sensitive during the times that they really need that car service or that whatever that service is somebody's providing. So you're taking advantage of a certain situation that's there, but we do that all the time in other ways in order attributes and things like that in a transactional environment. So if you want rush order, you pay for the extra fee for the rush order. So you're telling me I'm not allowed to charge a rush order fee in a manufacturing environment? That's not there. 3-day shipping versus 1-day shipping, and I'm paying extra for the 1-day shipping. So you're telling me I can't charge extra for that? That's a type of surge pricing. That's a type of sort of need that you have for a given moment in time, and you're willing to pay for that difference in need, right? And I don't, that. So it does. You guys are right that the words you use and the way you say it, has this consumer backlash, but consumer themselves is just completely doing what they naturally do. So I've got some strong feelings on it. Maybe we should pick it up at another
Let's park
time.
it there.
Yeah, let's park it there.
We can pick up next time. Thank you for this.
Thanks.
All right, I'll see you guys.
Bye.
Later.